Most traders draw supply and demand zones wrong, and that's why their levels keep getting blown through. In this video, I'll show you the simple step-by-step way I mark out high probability zones so you can stop chasing trades and start letting price come to you. Quick refresher, what is a supply or demand zone? A demand zone is where buyers stepped in aggressively and pushed price up. A supply zone is where sellers stepped in aggressively and pushed price down. Now, as you can see, this is different from our normal everyday charts. I normally have a white screen. Today we got the charts pulled up. All right? That being said, I've made a few videos, market structure, supply and demand, all that. In this video, we're going to combine it all together. Right now, we got typical GU chart. Feel me? I normally trade gold, but for right now, I can't trade gold on futures, so why not have these charts shown so you guys can understand? You can do the same thing in Forex, okay? Now, this being said, we're going to identify structure. You feel me? So now, current structure on the higher time frame, I don't look this high when I trade, but I'm showing you so you guys can get a framework. You feel me? Lower low, lower low. Lower low, lower low, lower low. But all of these are higher than the previous low. So this is not structure for a downtrend, right? This is structure for an uptrend. Okay. Now some people will go as far as to do this and be like, oh, we're going down, but I like to look at current price. And current price, this is going up. Now this ain't current price, this is really looking back. This is 2022. But since 2022, we've been going up. So what should you be looking for? Up trades. Cool. Now that that's situated, let's go to current price. Boom. Current price. Let's look at this leg right here. What does this leg tell us? However you want to draw it, this leg is still telling us up. You see? So we have a low here, a low here, low here, low here. None of these are lower than the previous low. So with that being said, up. We have a high here, high here, high here, high here, high here, high here, high here. All of these highs are higher than the previous high. When we watched the video, what did we see? Higher highs and higher lows, which is what you see here. Let's find the tool to mark it out. Path, up, down, up, down, up, down, up, down, up, down. Now, is this not a typical higher high, higher low situation? Right? As you can see. So with that being said, our current structure is what? Up. Cool. So now that we found structure, let's go ahead and apply some lines to it. Right? And this is on the daily chart. We found support down here. Right or wrong, double bottom. Right? We found a support here. I like to put 2. We didn't find support here, so let's transition. We found support here, and we pushed up and came right back to it. So now look. We're anticipating to find support somewhere here. Cool. Now, if you know supply and demand zones, you know Every aggressive push up has a candle that signifies where orders are left. Right here. Right here. Is it this 2 or is it 1? I'll put the 2. Right here. Feel me? All of these are zones price could come back to or have came back to then tap in, fill the gap, fly up. Here's another one here. It's a lot more respected. It tapped into here and then price used it again. You understand? These are great supply zones. I mean, these are great demand zones. So now, once you understand structure, structure then filters your trades. Now that we know we are in up structure, what should we be looking for? We should be looking for demand zones to continue going up. Where should we be looking for demand zones? We should be looking for demand zones in points of interest. What are points of interest? Points of interest are areas in the market where you think price is going to have a reaction there to continue in the direction that you believe market structure is going. So if we believe structure is going up, we have 2 points of interest. Points of interest number 1 is this resistance turn support is number 1. Point of interest number 2 is this supply zone, an area where price moved aggressively up and we feel price has to come back to pick these people up to then go again, right? Okay, now how can we support our bias now? We would drop down into a smaller time frame to give us more confirmation, right? Okay, so we've bounced off these highs, we've touched once. Now, in order for it to be a guaranteed this area is secure, you need to figure out what would you like to see happen. For me, it's 2 taps to a zone to make sure it's true. So if we come back here, look, where's that thing? Was it here? Was it here? Path. 2 taps. 1, 2. This is the second tap to the ground. Second tap. So now I know this is legit. Came up back here. Third tap. Push up. Okay? If we bring this up here, what do we see to make things simple? Well, let's drag this up so it doesn't get confused. From where we started, we've hit 1, 2, 3 times, right? We've hit this high 1, 2, but we've hit this low 3 times. So what is it saying? The low is beginning to be stronger than the high. If you do candlesticks patterns, head, left shoulder, right shoulder. If you do M's and W's, here's a W neckline retest. Neckline retest is here. So we're looking somewhere here. Price came close to it. So now you just need it to respect it. So now you would want price to then come here, do one of these, and continue up. We already have this leg. We just need this to do this. You guys understand? If we're following structure, as long as the lows aren't broken, structure is holding. So now, that's how you find an area of interest that you like. Now, we still have this demand zone here, and we have another one right here on a smaller time frame that's telling us price aggressively left here, and it can come back there. So what are we going to look for? If we see an aggressive candle shoot down, well, we can slide down to a smaller frame. We slide down to a smaller frame. Run the 1 hour here. Here is where you need a break of structure to confirm your trade. We have 1 hour break here, a 1 hour supply here, 4 hour structure right here. We haven't broken the 4 hour structure, so we're still in a sell trend, but we're in a daily buy. So now what we have to do, a break above here and a continuation move up with a retest will then confirm your move up as long as no lows are broken. But what do we really want? Pull down into here, decide we don't want to go up because look at the structure. What do we want on structures like these? Areas of interest. Feel me? We want price to come down and either go up or confirm it don't want to go down to keep going up. That's what we want. That's what we want in the lower time frame. So now, do I know if this is going to get tapped into? I really don't know. It's in high probability setup, but we also have a support and resistance zone. So now, here's what you want to do. When market open, if you want more details, you can go into more details, but in this area right now, I don't need more details. What I want is a pull down to then turn back around to confirm the buy up more. Understand? The first thing I look for is the strong explosive move away from an area that tells me there was an imbalance. Buyers or sellers were clearly in control. Let's go back. Let's go show. So, we look for a strong explosive move away from an area. Strong explosive move. Let's go back to the daily so it's more clear. Where's the strong explosive move? Right here. Large candles, strong momentum, little hesitation. No strong move, no strong zone. Feel me? Find the base before the move. This is the base. The small consolidation right before price exploded is what you're looking for. Consolidation, no clear direction. It didn't want to go down and it's breaking up. Tight candles, sideways pause, then big push away. This is what you're looking for. This base is where orders were building before price took off. all of this right here. Mark the zone correctly. I mark from the lowest wick of the base candle down to the body of the last candle. What I mean by that is this. I mark from the wick up to here. Sometimes if this candle needs to be used, I will use it to make the zone bigger if the zone is too small. But I mark the previous opposite direction candle before the biggest move, or the two opposite candles before the big move. For a supply zone, you mark the one opposite candle before a big move. Either this one or this one for sells. Understand? We're marking where the imbalance started, not the entire move. Fresh zones are higher probability because price hasn't returned yet to remove those orders. What fresh zones mean is any zones that do not have wicks into them. So if we zoom in, when price left this box, it wicked, but not into this box. It created an imbalance. All of this, when it pushed up, was an imbalance that needed to come and get retested. These gaps in the market are normally not supposed to be there, you see? So when they come, they need to fill those back in, so then price is not imbalanced. Understand? Same for up here. You have this little gap between this wick and this box that price needs to fill. And it will fill it on the way back up, but it needs to fill the down ones. Fresh zones equal untouched. Used zones priced already came back. Each retest weakens a zone. I don't just trade zones anywhere. I want demand in pullbacks during an uptrend and supply in a pullback during a downtrend. That's what I was talking about earlier. When you push up, you want demand in a pullback and supply when you're in a downtrend. We're in an uptrend right now, so we only want demand zones. I avoid messy zones. Slow grindaways, too much candles in the base, zones inside choppy markets, and zones that are tested too much times. Those zones are zones that we stay away from. If they're not clean, we don't trade them. Find a strong move. Identify the base. Mark the zone where the imbalance started. Make sure it's fresh. Trade it in the direction of structure. That's the process. If you lose, you lose. If you win, you win. You understand? In the next video, I'll show you what makes a supply or demand zone strong versus weak, so you know which levels are actually worth trading. I kind of explained that in this video, but next video we're going to go more in depth so we can kind of understand what each of those zones is and how we're going to find it out. Okay? Thank you.